Welcome to Bond STX. This is Lance, the Bargain Stock Bounty Hunter, back at you again with another video. This is week 17, April 25th, April 29th. Week 16 was a wild week. We'll get into where the market finished off for the week. But before we get started, let me get a disclaimer going. I am not a financial advisor, nor am I advising anyone to spend their money. This is only for educational purposes and only my opinion. Any money spent is at the individual's own discretion and not due to any information from me. So getting into the market, we'll look at some of the plays of the week as I go through my scan. So if you're new to the channel, I typically scan anywhere between 75 to 80 stocks, and I'll look at the scans and I'll look at true value. I'll look at trends. And I'll also mention if there's some that I will call a long-term play or a short-term trade. And so, before we get started, as I normally do, let's look at the market in a whole. So typically starting out, I'm looking at the Nasdaq, looking at 1 year, 1 day. And getting a lot of lines on the chart here, but what I want to point out is since the war started here, the market has been in a kind of a tizzy, so to speak. And so where the market finished out Friday, you can see actually Thursday and Friday, a big downturn into the market. See a resistance at the lower, what I call the cake band, which is the stronghold of where the stock prices, the Nasdaq points want to be at. And so you see that resistance there, and then you see it come down, and actually on Friday, it broke through a support, and that's the same support it broke through during the Ukraine war start, and also broke through a couple weeks later after that, and it broke through again. And so we're starting to see this pattern start to happen, which makes it show that it's going to come down to this support level. So we see it broke down the trend here, came down to the next support, broke the trend here, came down pretty close to the next support, broke the trend here, came down to the support, which was the low of the year at 12,555.35 on the Nasdaq. Then you see it rocket up, and now you see it back down again, right? So here we would suspect that in this week, coming into this week, we would almost suspect it would come down to support here. If it does not come to support here, that's a good sign. That means that the lows are getting higher from previous occurrences. And so therefore, it would mean in the future, the highs would also be higher. As you see, it actually did not cross the SMA, which is the simple moving average. It did not cross that. And we would expect to see in the near future, it would actually cross it out here and somewhere in the future. So interesting week to see where the market turns. I suspect that by Friday, I would expect the market to be somewhere in the range of the 12,767 to the 12,970 range. So a little bit higher than where it ended Friday, but not much higher. So we'll see how the market turns out. Again, real interest to see if it comes down to the support line. If it breaks through the support line, it's definitely a bad sign because it's going to get lower than it was here. It's going to create new lows, which means the highs are going to be lower, which would definitely put us going back into the terms of going into a market crash. So we'll see. I believe the market could bounce back Monday, possibly bounce back a little strong to cover some of this manipulation here. Then maybe Thursday and Friday, Tuesday and Wednesday a little flat, Thursday a dip down, and Friday a little bit pull back. So possibly if it does come down to here, I would expect it to happen Wednesday or Thursday. But we'll see what happens this week. Moving on to the New York Stock Exchange, very similarly looking at a 1 year, 1 day. And you can see again on Thursday, Friday, definitely a strong pull down. You actually see the teal here, the teal EMA, which is the exponential moving average, cross the green EMA and the blue. And so definitely in a downturn. You also see the green cross the red, and the green is actually crossed the blue. The red has not crossed the blue yet, but if the red crossed the blue, which I would expect this week, you would definitely see this be more in a bearish pattern. Again, you look at supports here and you see previous supports. It actually came down to that previous support. The next support line would be the bottom band of the cake level here. So if it does continue down, I'll expect it to help support here as it's done here in the past, recently, and then pull back here sometime by Friday. So again, if the market turns around Monday, I expect to see a little bit more of a downtrend again Wednesday, Thursday. So if it does bunk that trend and continue back upward, would be great for those who are investing in stock equities. So let's start off with a couple of plays of the week, and see a couple strong movers coming into the week. Kellogg, AT&T, McDonald's, Walmart, American Airlines, Target, Halozyme. None of those showed any good opportunities to buy in. Again, I like to buy stocks at a undervalued price, as I call buying them for cheap or on sale. And so a couple opportunities coming up this week. So Citigroup popped up as a great opportunity this week. It's on a flat trend for the month. It's 89 cents on sale, coming in at a true value of $52.12. So let's go to the charts and see what Citigroup is showing us and opportunities I want to kind of point out. So I haven't analyzed Citigroup yet this year. So starting out looking at a 1 year, 1 day as I kind of look at the big picture. You can see Citigroup has this nice little SMA rainbow as we typically see in some stocks. It doesn't stay what I call into the cake very much. It was very overpriced for the last, I would say, 6 months, or going from last year, going back to November, I'm sorry. And then actually you see it come into the cake zone slightly, but see it being resisted by the SMA here. And so ideally, we expect this to come back and cross the SMA as we saw it was last year. So it's a good opportunity to get in. It's under the cake range. Again, a good opportunity based on some of the things I'm seeing here lately. So looking at the MACD, we see the movement coming up, some momentum building for this price, for the stock price at these low prices. And we also see that it just has recently had a earnings call. And so we're past that, which is a good sign. And we already had its low of $49.04 on April 7th. So looking at some opportunity here, there's some uncovered manipulation here. And that goes back to March 3rd. And so what we see here is 54 million shares, 54 million shares bought at the price point of $57 to $58, right? That's uncovered, meaning the price has not come back up to that to cover the shareholders who bought this stock. They're still holding this stock. Typically, they're not going to sell it at a loss, so they're still holding it, waiting for it to come back. This could be hedge fund companies. This could be inside traders. This could be board members of Citigroup. So it's a lot of shares being purchased, which is a good sign that there's a lot of expectation that this price will come back, right? There's another uncovered manipulation from March 30th. So we have 32 million shares purchased, and you see them being purchased at a price point of $54.97 to $56. Again, uncovered manipulation. The price has not come back to match that price point at all, right? So We have 2 uncovered manipulations, which is a great sign that I believe you could get into this one and eventually get back to these ranges here in the near future. So zooming in a little bit closer. So Citigroup ended down at 51.23. It trades on the New York Stock Exchange. Comes in again at true value of 52.12. I believe looking at a localized pattern here, or localized trend, I believe you could get in Citigroup this week at $50.60. So I feel very confident that the price will come down to that. I see possibly a little bit support here, even at the $50.18 range. So I feel very comfortable going in at $50.60, and that's my call out for Citigroup this week. $50.60. All right, locking that one in. Next on the scans for this week, I had TSRI come in this week at a flat trend. I believe it's a short-term play. It's a very low volume stock. I wouldn't put a lot of interest in this one for long-term because of that. It's $1.57 on sale, coming in at a true value of $10.79. So let's go to TSRI. Called this one out a couple times this year. I believe this one is a great day traders stock. It's a lot of patterns here that we see. And so if we look at 1 year, 1 day, we look at the cake range, we see a lot of spikes into the cake, out of the cake, into the cake, out of the cake, into the cake. This one just hit $15.59 April 8th. And now it's down to $9.22. And we see that pattern happen over and over. $15.28 on January 31st, $16.80 on September 2nd of last year. And we see many other instances of it coming into the cake, hitting into the cake, and jumping right back out. So it's a great pattern we see being developed. So a couple opportunities here. Again, we see some uncovered manipulation here. We see it in April 12th. We see some more on April 11th. We see it definitely is coming to a downtrend in momentum here. And we also see that we do see some 2 green bars from Thursday and Friday, meaning the price is starting to hold support from where it has support from, looks like March 29th. So it held support here, and we'll see if that comes back around. So I think in this week, I feel confident that TSRI should get in at $8.75 with the turnaround, hopefully by Friday, looking at about possibly 10%. And we see this stock is very rangy. So we see on 1 day, 7% gain, another day, open to close, 10%, another day, open to close, 10%. So it's very possible in 1 day, we could get this price back into the $9.62 range, $9.85 range, which should give you about 10% gain if you get in at $8.75. So I'm going in with TSRI at $8.75 is my call out for TSRI this week. All right, locking it in. Next on the scans for this week, Macys. Called out Macys last week. It was a great opportunity to get in last week. We'll see what the chart showed. Coming in at a flat trend and at 89 cents on sale. True value of $25.16. So looking at Macys on the charts last week, we'll see what the call outs from last week, how it did, and where the price ended up. So called out Macys last week. Saw a good trend on the SMA moving up. Called out Macys at a price point of $24.75. It never came down quite that low. It did come down to true value price of $25.16. See that happen on Monday. And then it shot off. And again, as I projected, this one was going to go into the up here into the previous resistance. And we see a pattern where it's blowed through the resistance, and it blowed through it slightly last week and then came and pulled back down. Obviously, Thursday and Friday, the market turned down. This trades on the New York Stock Exchange. So typically it's going to follow that same pattern of the market. So it didn't actually end up where I projected it, actually ended a little lower, but it did have a great opportunity to get in at true value and then also show some good returns there. So this week, I think another great opportunity. I do believe it's going to fall quite a bit more. We see the teal and the green are just about to cross. We also know that it is in a slightly downtrend going all the way back to December 20th. So just kind of see just a very slight downtrend against the cake band here. So it's heavily in the cake, which is a good sign, but slowly kind of dragging out of the cake. You can kind of see the lows are getting a little lower from previous instances over the last, again, 4 to 5 months, so to speak. So I think with that being said, it's a great opportunity to get in, I believe, with Macys at about 2309. And I believe you can get in at 2309. And eventually by Friday, you can get out here if you don't feel like holding it very long. I do think Macys will definitely come back and hit this trend line here as it's done before in the near future. So I think great opportunity to get in and get out with about 2.8% this week. In following weeks, couple weeks down the road, definitely get out with about 15% gain. So very confident with Macys. Has a very readable pattern, very consistently, just in zone, constantly back and forth all week. So I would say, again, good price, good opportunity at 2309. So 2309 is where I'm going with Macys this week. All right, locking it in. See, next on the scans for this week, Fedex. So Fedex comes in, another one coming in flat this week. It's about $5.06 on sale, coming in at a true value of $210.27. I called out Fedex a couple weeks back. Let's look at where that call out ended out and what I'm seeing coming into this week. So a couple weeks back, called out Fedex at a price point of $212.80. It came down pretty close to that. I don't think it, let's see, it came down to $212.93. So it didn't quite come down to that price point. It did come down below true value, and it did follow this trend that I projected it would follow. You see it did follow that trend, and then by Friday, it actually almost ended off into my projected price zone. But since then, it did have a projection above this expected trend. It bucked the trend and it came down, and it bucked the trend on the opposite way, right? And fell below. And now it's kind of starting a new trend, very similar to where it was a few weeks ago. So you kind of see it kind of falling, same trend over the last couple of weeks. And I feel that after looks like Thursday and Friday, actually Wednesday, it showed a resistance to this new trend and also showed resistance to the red EMA, which is a projected EMA, and looks like it's also showing another resistance to the green projected EMA. So looks like it's starting to fall down some. We do see the momentum starting to build here. And so I think there's an opportunity to come down, that it will come down to 203.28 in this week. And I definitely think Fedex for the next couple of weeks, in the next couple of months, it will actually attack this SMA as it's falling down. So we'll see that hopefully cross and come down probably around the May 31st, early June timeframe. And a lot of that depends on if the market turns back around. This is another one that trades on the New York Stock Exchange. So New York Stock Exchange is in a little bit better place than the Nasdaq, as what we saw earlier. So I do think this week at $203.28, it's a great price to get in at FedEx, and just to hold this one for, again, a couple weeks or a month or longer. So 203.28 is my call out for FedEx this week. Locking it in. All right. Next on the list, coming down some more, Carnival. So Carnival is another one that showed up on the radar last week. Called this one out last week, so we'll be able to look at where the call outs fell and where they were from last week. But I'm gonna call this one out again this week. It's on a -2 trend, so slightly downtrend. 70 cents on sale. $19.54 is its true value. And I like the chart on this one. The reason why I call this one out again, I think there's still good opportunity in Carnival. And so Carnival's had a lot of volume coming in here lately. We definitely see there's a good up and down pattern for the MACD that we see. It looks like it's starting to pull down on the MACD, meaning there's some lower prices starting to come in to be purchasing this stock at. And so last week I called it out at a price point of $19.04, and it actually came down to that Monday, and then we saw it come back down that Friday. So Monday came up to 1904, came up about 8% to $20.60. And it fell back down, obviously, Thursday and Friday. So I projected that it would be in the 1959 to 1988 price point. Definitely came all the way down to 1884. But definitely some opportunity in this one. You could have came in and got out. I projected it was going to actually cover this manipulation this week, last week, and it did, because it was here coming into the week. And so I called the price point here, came down to my price point, and again, I was expecting it to cover this uncovered manipulation going all the way back to April 5th, where we had 68 million shares buying around this price point. So it covered that manipulation, and now it's starting a new manipulation, and that's where we're looking for it to come back and cover this manipulation now, right? So this manipulation covered this one, and now we're looking for an opportunity to cover this manipulation, which will be somewhere around the 1951 price point. And so at 1884, it's a great opportunity for this one. I believe it's going to come down a little bit further, looking at the MACD. So I think in this week, it's going to come down to $18.29. It may not do that Monday. It may do that more like Wednesday, Thursday, or Friday, and then possibly getting out of this one Friday, looking at about 3.3% gain if it can bounce back by Friday. So definitely think you could still hold this one for the long term. Again, this is the projected support here on the light trend going all the way back to a couple months back. So it's on a slight uptrend for a couple months back before recently it's on a slight downtrend. So that makes any sense to you, but not to confuse everyone, but overall it's on a slight uptrend, but here lately it's on a slight downtrend. So big picture, I do believe long term this one is going to still climb. It is Carnival, they're cruises, they're in the business of cruises, and of course with all the COVID restrictions being relaxed, and then we've got summertime coming up, vacation times coming up. So a great opportunity for this one to actually be a little bit of a hold for the long term. So I'm going in with Carnival. It comes down to 18.29. I'm gonna feel really, really comfortable buying this one this week. So 18.29 is my price point for Carnival. All right, locking that one in. I believe that one is all for this week. So not a lot of call outs for this week. There's a lot of stocks in flux due to the market pullback. Still a lot of good stocks out there to go get, but I would definitely be careful of buying anything over price. So again, thank you for watching the video. Keep waiting for some more videos to come through. Still have some company breakdown that I'm working on putting out, and look forward to putting out some more good tips and tricks. And so I appreciate everyone joining and listening in, and thanks for all the new subscribers. Have a good trading week.